If you took a static snapshot of our economy today, you would see that yes, our economy is starting to slow down off our 2021 highs, and while layoffs are rising, jobs are still around, but while people are struggling because of inflation, they're still able to get by because spending is still growing. So if you just look at that static image, yeah, things are not perfect, but it's okay, it's not horrible. But if you take a look at our economy with a live photo, where now it's not a static image, but you kind of see what's going on before and after, and you can kind of see the trends of what's going on, that paints a very different picture. Like we recently just had another billionaire investor come out publicly who said that our economy is, quote, breaking hard, and that we are going to be entering a major crash if we continue down the path that we're on right now. This was an interesting article because you have this billionaire investor who's also an asset manager who essentially came out and said that the Federal Reserve Bank needs to stop raising interest rates. Now, of course, the Federal Reserve Bank just raised interest rates aggressively again, but he was saying that the Federal Reserve Bank should not raise interest rates anymore because if the Fed keeps raising interest rates like this, it's going to push the economy into a deep recession and it's going to cause asset prices to tank. According to him, the United States economy is teetering on the brink of a serious downturn if the Federal Reserve doesn't pump the brakes on its rate hikes. So you have this very successful investor saying that the Federal Reserve Bank needs to stop, while on the other hand, you have Jerome Powell and the Federal Reserve Bank who are saying that they're going to continue working hard to bring inflation under control because inflation is too high, so they're going to continue to raise interest rates and do whatever they got to do to maintain price stability, aka bring inflation down. He has some pretty strong words for the Federal Reserve Bank. He says, if the Fed keeps this up, they're going to have a serious recession and people will lose their jobs. Now, anytime you read an article like this or really read any sort of information, it's a really good habit to understand the source, meaning who is this person, what are their goals, and how do their opinions align with their goals? Because this billionaire investor is an investor and an asset manager. He manages something around $60 billion worth of assets. So what does that mean? He invests all this money, billions and billions of dollars worth of money for his clients, and he puts this money where? Well, markets like the stock market, maybe the real estate market, maybe a little bit in cryptocurrency. And well, these asset classes, stocks, real estate, and crypto have been hit. Stocks have been hit hard, cryptocurrency has been hit extremely hard, and real estate is starting to slow down. And so if you are an asset manager, you're managing people's money, you want your investments to go up, right? I mean, if you're seeing your investments go down, your clients are going to be angry. And so for him, it does make sense that he's going to want to ignore inflation. He's going to want to ignore what's going on with the price growth of things, and he's going to want to see asset prices rise because that's going to benefit him and that's going to benefit his clients. And this is where you just got to understand, yeah, there is a cost to fighting inflation. People will lose jobs. Companies will go under. Some companies will go bankrupt. Some assets will crash. We've already seen stocks get hurt. We've already seen cryptocurrency get hurt. We've already seen real estate now start to get hurt. But this is where it also creates opportunity for the people who are prepared. And this is where my goal, like I try to keep this as unbiased as possible. I will tell you when I'm giving you my opinions. My goal is just to get you to understand how to win in any situation. Whether interest rates are going up, whether interest rates are going down, whether you have high inflation or low inflation or whatever is going on in the economy, there's always a way to win. My goal is to help you win. And in this environment, it looks like the Fed is going to continue raising interest rates. That will continue hurting the economy. That will continue hurting asset prices. When you're in that type of environment where things are going down, well, the people who win are the people who have liquid ability to go out and buy assets at a discounted price. That means buying things like stocks when they go on discount, buying things like real estate when they go on sale, buying things like cryptocurrency, if you believe in cryptocurrency, when it goes on sale, finding the good assets, waiting for a discount, and then coming in and buy. That's the way that you win in an environment where interest rates are going up to fight inflation, which is causing the economy and asset prices to go down. So this is where, again, you want to understand the psychology of things and not get super influenced by just headlines. That way you can be the one that's winning in these financial situations. Now, of course, if you do like the idea of investing your money into things like stocks and cryptocurrency, make sure you have a good brokerage because there's a lot of sketchy cryptocurrency brokerages out there, and you want to make sure you're also keeping your cryptocurrency in a wallet. If you're looking for a good cryptocurrency brokerage, you can check out our sponsor FTX US. I like FTX US because one, they make dollar cost averaging cryptocurrency super simple. Like if you want to buy Bitcoin every week or every month or every day, like I do, I buy Bitcoin and Ethereum every day. You just push a few buttons and it's done. Second, their fees are super low. So more of your money can go to actually buy you cryptocurrency instead of just making your brokerage richer. And third, it's super simple to use, and they also let you now trade crypto, NFTs, and stocks right off of their platform. And right now, because you're a Minority Mindset fan, FTX US is also giving you some free cryptocurrency when you use my link down in the description below and then enter in the referral code MINORITY. When you do those two things and enter in my referral code and then you trade $100 worth of crypto, they will give you some free crypto just because you use my link and my referral code. So if you want to learn more, I got the link to how you can do it down in the description below. Probably one of the most interesting parts of this interview though was when Barry, this billionaire investor, was asked about inflation. And what he said was that CPI, this inflation data that we have, is a lagging indicator and the Federal Reserve Bank needs to stop looking at CPI. He says that inflation is not that bad anymore. And the way that you can ask, according to him, is just call up the major CEOs. Call up the CEO of Walmart, call up the CEOs of these major real estate development firms, and they will tell you, according to him, that inflation is cooling because rent and price growth is cooling. And because of that, inflation is cooling, so the Federal Reserve Bank doesn't need to stay as aggressive. Now, that's an interesting way to put it, especially when you compare it to what many people are facing, because many people are still facing higher inflation. Like our most recent inflation report had one of the fastest growth in food prices since 1979. So people are still facing inflation. We have seen inflation fall because gas prices and energy prices have fallen, but rent prices, new car prices, shelter prices, medical prices, the prices of most things are still rising for people while wages haven't been able to keep up. So you can understand that there's a lot of different opinions out there. And this is where the Federal Reserve Bank is trying to play this game where you got to understand the Fed doesn't want to see stock prices crash because then people are not going to like the Fed. But they also didn't want to see inflation so high. And right now they are working to fight inflation and they're still hoping that it's not going to cause a major market crash. They're hoping that it's not going to cause a major recession, but they're willing to cause prices to go down in order to bring inflation down. Now, to what extent? This is where we don't know. We don't know how long the Federal Reserve Bank is going to be willing to keep up this fight on inflation. They say, Jerome Powell has said it again, that he's going to continue this fight on inflation until he can bring inflation down to his goal, which is around 2%. Now, we're still quite a bit of ways from 2%. And if inflation has to be brought down to 2%, that could require interest rates to be raised quite a bit. And that would come with a lot of consequences, job losses, asset prices crashing. And there might be a breaking point where now the Federal Reserve Bank says, okay, our goal was to bring inflation down to 2%. We're not completely there yet. However, inflation has come down, but now we want to focus on the economy. We want to focus on jobs. We want to focus on asset prices. So then the Fed starts stimulating. And this is where we don't know if the Federal Reserve Bank is going to do that. And if they do, when will they do that? This is where you have that X factor, the Federal Reserve Bank. And this is where now you as an investor can't perfectly time the market because we don't know what the Fed is going to do. Maybe they're going to continue raising interest rates very aggressively no matter how many people lose their jobs, no matter how much asset prices fall. And that could create great buying opportunities for you if you have cash that we can come in and buy assets. Maybe the Fed starts to see asset prices fall more, people lose their jobs, and then they start cutting interest rates, causing things to balloon up even more. So now instead of trying to time the market, instead of trying to predict what the Fed does, you can now be a smarter investor. One of the things you can do is create a passive system, like how I passively invest my money in cryptocurrency. I also passively invest my money into stocks. I also passively invest my money into physical gold. That's one option. Or if you want to be more involved with investments, don't try to time the market. Instead, look for a good investments. So spend your time trying to find the best companies, the best investments that you want to make, and then just wait for a good buying point. You know what price that you want to buy, and when it hits that price, you buy. And as it goes lower, buy in phases on the way down. That way now you're not throwing all of your money in at once and then worry about your portfolio getting cut in half. To avoid that, buy in phases on the way down, but this requires you to be more involved, meaning listening to the earnings calls, staying involved with the company, understanding what they're doing, and making sure that it's still a good company. So you got to figure out what you want to be. Do you want to be a passive investor or more of an active investor? And by active investor, I don't mean trader. I don't advocate trading. I don't know how to trade. I'm not a good trader. I'm an investor. But you got to understand, do you want to be actively involved with your investments, or just passively involved, invest your money into ETFs, invest your money into the assets that you want to own, and let it happen passively, consistently, and automatically. But you have to be willing to stick with your strategy and know how what's going on in the markets and the world is going to affect your strategy. The way our system works, there are two ways that you can make money in this system. You can make money through your labor, which is you going to work every single day and getting a paycheck. So your salary and your paycheck, this is your labor. This is what we're all told to work for, right? Go to school, get a good degree, get a job. Why? So you can get a salary. But in reality, in this economic system, that is the worst way to get paid.